We gotta run, guys. We gotta run. We gotta get out now. Well, not really. I'll talk about that in just a second. But first, look, it's brew time. I'm gonna put this camera over here. Check it out. I'm going with the drip today. You know why I like to do the drip, man? This is how you get all the flavor. You get all the flavor, all the oil. You want to suck it out of that coffee. Machine can't do that. So, I'm going to check this out. I'm going to pour this in here. You can't smell this, guys, but oh, does it ever smell good? You'll let it soak in there a little bit. Let it soak. Let that coffee soak. It's like that. Hear it? That's power. That's total power. Look at it. Man, that smells good, guys. I don't know if you love coffee as much as I do. But boy, look at that. Look at that. See the oil come up on the top of that? That's what keeps humans alive right there. That little sauce. See that? Woo, baby. I'm sorry, but there's only a couple of things I'm really obsessed with in life. Motorcycles, which you know. Peanut butter, which you don't know, and we're not talking about that. And of course, coffee. Like, I've got to have those things. Oh, guitar. Yeah, guitar too. Got to have those things in my life. This, oh yeah. So you just kind of let it sit there, right? Let it drain out real good. It's messy. It's like draining the oil pan on your car. Look at that. See that? And you can always tell the quality of coffee that you buy by the amount of oil that it produces on the top. More oil, the better the coffee, the better the quality. And when you're done, you just kind of roll it up like a tea bag there. Now this is heaven. Look at this. See that coming out of there? That's stronger than crack cocaine. Like, look at, oh, now look. Look at that. It's like charcoal. Oh man, guys. That's what I'm talking about right there. That should wake us up good for market mutterings. Oh, that's right. Looks like motor oil just the way that I like it. Now, tell you what. Let me clean up my mess here. We're going to go over this way. You can't even smell this. It smells like hair on fire with like charcoal, like a grill outside. Oh man. So you know what I want to talk about today? We're going to move over here, but before we do, we're going to talk about this market, guys. I'm smelling something, not just this coffee. I'm smelling something. I'm smelling a change in the air. I feel the cries of maybe some bulls. Not that I'm going full bearish, but man, there's some things that we're seeing today that we've got to talk about that's really important going forward. Some things that we haven't seen, some convergences. We got to talk about that. I know what you guys are looking at. I know I'm handsome and all, and this coffee's great, but let's face it, the Triumph. I mean, come on. Seriously, right? It's no competition. It's the sexiest thing in the world. Look at that. Love that bike. You already know that. But you came here for stock, so let me switch this over to the webcam, and we're going to talk. All right, so I had to go back. You know what, real quick, I had to go back to the webcam thing because I'm having rendering problems. Now, if some of you want to know what is rendering problems, I always have problems when it comes to editing and rendering. But when I'm using the other camera, it's taken like an hour to load, and I don't have time to go back through it. Because my important job is to take a grope in the murkiness, deliver you guys some quality trade setups. Welcome to Stock Market Mutterings. Doug here. Thank you. So let's talk about this market. Let's talk about this market. Most specifically, the Qs. These are the ones I want to talk about. And the thing I want to look at here are a couple of stats. First of all, like I mentioned yesterday, this is the strongest 50-day span ever in market history. So again, you're witnessing something right here that is historical. By all means, this snapback rally has been vicious, probably caught a lot of people off guard, and exceeded any sort of common sense, which we talked about yesterday. All the unemployment, all the manufacturing misses, earnings misses, don't matter. None of that matters. But when things go up, they do come down. And I really believe we're entering this thing where you're getting all of these overbought indicators in the market, and they continue to become more overbought, and you're now reaching significant milestones as far as resistances and V-shaped rallies and all that kind of good stuff. I don't necessarily think, like I mentioned yesterday, that we're in for a massive correction in this market, but it would be nice, I think, across the board if we see a 5 to 8% sort of pullback here. Now, some people always want the market to go up every day, and I guess that's okay. No, that's not okay. That's not okay, because what we want to do is be able to buy. So when you look at, and here's the thing, when you're looking at how do you make money in the stock market, like what's the best way to make money? How do you really get rich in the stock market and all that? It's being given opportunity to you on a plate. You have these certain days when the market's melting up like this. You're just scalping around. You're playing with ranges, and some ranges are great, don't get me wrong, but you're playing with these tight ranges. When you get the opportunity like what we saw a couple of months ago, where the market just whacks out 25, 30% and shakes the tree real hard and gets everybody out, that's the best opportunity. That's when you can just really step in there, load up, and get aggressive. And the reason that you want to do that is because you're not going to get that opportunity every month of the year. Like the market's not going to dip 30% every month and then rally back. You're not going to get that. You might see this event once every, I don't know, once a year, if that. So if I'm looking back here, like for the last, I don't know, decade since the financial crisis, the only two times I think, maybe there's a third, I can't really remember. You know, got to give me some credit for my age. I can always blame that. But we had the 2018 December sell-off right there at the end. And then we had this one. And outside of that, we haven't really had any. Now, last August, there was a little shakedown, but I think it was maybe 5, 7% or something like that. You'll occasionally get those, but you're not going to get that on a regular basis. Most of the time, you're in a non-volatile, really tight range. So these are what you want to see. At this point, what I think will happen here is we do pull back a little bit, and then we stabilize at some spot, and then kind of re-gear. As far as the SPY is concerned, I think I talked about this one yesterday, that we're probably going to move into back under the 300s and connect with some of the moving averages. Now, why do I see that? Well, first, we started to see the clues last week when we talked about how the tempo, and here's what you guys also have to look at. When you trade in front of the screen all the time, you pick up clues. And even though stocks go higher, right? It's not about higher and lower in terms of price, but it's also what was the behavior in between those two prices. So if it went from low and high, how did it do that? Did it go straight into that? Did it go like this way around the bush? How did this whole thing come down? And that tells you the clues that you're looking for. And even though we saw the Qs go to highs, we saw stocks last week, things like Apple, you know, things like Facebook, your tech leaders that have been consumed, Netflix especially, we saw them have harder times making highs. Now, they made highs, not Netflix, but they did go higher, but it's the way they did it. The way they were really hesitant, like it was being forced. It wasn't as natural or as organic as it had been the previous couple weeks. What does that tell you? It just tells you that the interest in the prices are reaching a point where it's not that attractive, and there's some hesitation in that buying. That's how you're kind of reading that feedback. And I think today you're seeing, and a lot of these, they're just not at all. They're not interested. I mean, you take a look at Netflix, and it's like they've just given up hope. When I say they, the powers that be or whatever, they are giving up hope on this thing. Don't laugh at me with this. This is a joke, by the way. You are a loser. Yeah, I'll tell you about that, what that is. That's not. It's actually a joke. You have to be in the trade room. This is how we do it in the trade room. We have this little joke that the more you insult a stock. See, this is the kind of fun we have trading. This is why you guys should be there. We have this little thing going that the more you insult the stock, the more it'll do something with you. So, for example, when we're in a Netflix trade and it's taking some time, we're like, what are you? You chicken Netflix? You afraid of a little VWAP? Huh? Or, you know, we'll say, oh, man, look, the market's squeezing this Netflix. It's up 3 cents since the last time I talked about it. Just sarcasm. That's not for everybody, but that's the way I am. So some people ask, why are you that way? That helps me get through trades. You know, this trading can be stressful at times, and you can micromanage stuff. A little comedy, a little thing that locks it down. So I wasn't specifically saying it was a loser. It was actually a joke. And I said, until it reaches my target, I was going to leave it on there. It's still on. My apologies. Anyway, they've kind of just given up on this stock altogether. I mean, look at it. It's just horrible, horrible, horrible. But I think that's where we're going. So these names that I'm talking about, I'm specifically going down the list, and I want to start with day trade only. Okay. I got to think Lulu here. And the reason I say Lulu for a day trade is because they've got earnings coming up in a couple of days. Otherwise, I would swing trade this short. Now, I'm not saying it can't go higher, but I'm looking, you know, and again, I don't have anything against Lulu. I made some great money on this run up here. But when you look at something like this, has made such an astronomical move, it's not going to be sustainable. This type of chart pattern isn't sustainable. It has to come back a little bit before it really re-gears and makes that next up leg. I would be looking at this one. I would also be looking at Restoration Hardware. You have a very similar chart here on Restoration Hardware, and you also have it on deck. So these kind of like retailers and stuff have really gotten ahead of themselves here and have pressed up a lot higher. You also can make the case here for ZM. Now this one might be a little bit radical for some people, but when you're looking at those dailies, they are all setting up and lining up as shorts. Now when I say set up, that again, just because we've talked before, because price is high doesn't mean that tomorrow we start shorting. That's not how this game works. Same way with longs, you just don't haphazardly go into stuff. You have to wait for the right setup. But when you begin looking at daily charts, guys, you begin looking at the formation, the resistances, the supports, and the positioning at which the daily is. Is it going to break an inflection point? Is it taking out 6-month resistance, 6-month support? You look for these, and then from there you build your intraday setups. So you look for pivots, you look for areas and stuff like that to where you can get in these trades and get good risk to reward. Sometimes they work, sometimes they don't work, but you position yourself correctly so you can take advantage of these big moves. And in a thing like shorting, sometimes you'll have to try 3-4 times. You know, you might have to try it, get stopped out, try it, get stopped out, but you'll eventually connect with it. And I think that this is the case. We're looking for those setups intraday to give us some more clues to start thinking about, you know, executing some short positions on these stocks. I mean, they're just up a whole hell of a lot. Again, doesn't mean they can't go higher, but boy, are they ever up a lot, and they need a breather. They definitely need a breather, and I'd love to see some of them come back down so I can buy it. I'd love to see ZM go back to 150 so you could buy it. Oh. Anyway, I really want to look at this ZM. Now I want to look at it as a short. We'll see. It's already pulled back like 15 today, but we'll see how that one works. Definitely love all those retailers. Lulu, Restoration Hardware, Deck. I think all of these are ready to be shorted, and maybe they start out at scalps in the beginning, but those are shorts. Those are shorts just waiting to happen, and I'm talking maybe they have just one day, a couple percentage points. And you could probably make that claim for a lot of them. TWLO, for example, TWLO, but it went down quite a bit today. OKTA. You know, and again, all of these went up quite a bit today. Not today. They went up quite a bit over the last couple of months. And it's just normal part of the business cycle, and it works out better. So we really want to start looking at that. So when I'm saying run, now you don't necessarily need to run, but I think we've reached a level now where we need a pause in this action to confirm what we just had seen, where we had come from. And then we can begin that next leg up, maybe towards the middle of the summer. But for right now, I think I feel that's what's going to happen. Maybe it doesn't happen, and we have to change. But that's the way I'm looking at it. Govern yourselves accordingly, as they say. So I'm going to leave it right there, guys. Thank you for watching and supporting this Market Mutterings. Thank you for watching and supporting me. I appreciate it. You know, I appreciate it. I do. And if you have any questions, always feel free to reach out to me, support@thelincolnlist.com. Until the next time, trade well, enjoy yourselves. Talk to you then.